Small caps getting pinched this year. The Russell 2000 just in the red, while the S&P is up almost 15%. But our next guest says the future is bright for the sector. Let's bring in Essex Investments' Nancy Prial. Nancy, great to have you with us.
Nice to be here. Thank you for having me.
So you think that it's going to be small caps day in the sun soon and it'll contribute to market breadth. What is the catalyst?
So we think the catalyst, and I feel a little bit like the tree in the forest that's fallen and nobody hears me, but the catalyst will have to be earnings growth. So we are expecting to see a relative improvement in earnings growth in small cap stocks compared to what we've seen in large cap stocks. And even if we don't see it broadly, there are many small cap companies that are both doing well and that are seeing that earnings growth that's driving their appreciation. So that's what we want to focus on, is companies with good balance sheets, good cash flow, improving fundamentals.
There's some themes to the stock picks you're bringing to us, one of them being government spending or regulation, things that will drive investment in certain sectors. So tell us how that frames your picks.
Absolutely. So again, we want our small cap stocks. We want to take advantage of the valuation discrepancies that we're seeing in small versus large, and even in the small end of small versus the large end of small. But we want to do it with companies that are already seeing improving fundamentals and strong earnings growth. So we want the tailwinds of secular growth, government spending, trends that can support both the growth rates and the valuations. And we see a lot of that, particularly in the infrastructure area, companies that are benefiting from the Bipartisan Infrastructure Act, from the IRA, and very importantly, from the build out that's happening in AI.
Nancy, thanks so much for joining us. So I totally am with you in terms of the step down in valuation. Would you mind speaking a bit in terms of rate relief and how that might allow smaller caps to recap and move forward with operations?
Right. So if you'd asked me this 6 months ago, I would have said absolutely rate relief will be one of the drivers. We have seen some rate relief, certainly in the 10-year, and it has not yet begun to work. But we think that it's the combination of rate relief, continued confidence that the economy is going to be okay. It doesn't need to be a robust, but not into a recession. And again, very importantly, a relative turn in earnings growth. One misunderstood factor about small cap stocks is that their balance sheets have actually been improving through this higher rate environment. And so they are not as susceptible to high rates as people thought, but maybe that's dampening some of the recovery that we've seen with rates coming down a little bit.
Nancy, a big part of the small caps through the IWM, whatever you want to look at, are small and regional banks, which do not trade well. And if the consumer is, in fact, rolling over, which we've had that conversation for the last 45 minutes or so, I'm hard-pressed to understand how small caps do well under that environment.
I don't disagree with you on the IWM. I think some of the Russell benchmarks have some issues structurally with the way they're constructed. We look at the S&P 600 small cap as an example, and maybe the Wilshire 5000 as examples of broader small cap benchmarks that don't have those big exposures, particularly the banks. We do not like the small regional banks here. We agree with you. But having said that, again, this is a market where you can pick stocks and find individual companies that are doing well.